Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Tuesday, the 10th of October. I'm Daniel Lam, your host for the podcast. I've just gotten back from a most unforgettable 12 days at the Hangzhou Asian Games. It was the toughest tournament that I've ever had. Being the top board for the Hong Kong China team, I was facing strong grandmasters as well as international masters. Now, on the plus side, I actually learned much more about myself over that 10 days of competition than the last 10 years in terms of my chess. Not only did it give me new perspectives on my training, I also discovered what I can do to be the most effective in developing the chess scene and younger members of chess in Hong Kong. I do believe that this Asian Games was a key pivotal point in my chess career. Now back to finance, my colleagues Fook Hin Yap and Steve Bryce have spoken much about the strong rise in bond yields and the implications on asset prices. So today, we are shifting the gear a little bit from macro to a little bit more micro angles. And we'll be discussing the upcoming US third quarter earnings season. Well, that begins when major US banks start reporting on the 13th of October. After the expected trough in earnings in Q2 this year, Q3 is expected to revert to positive year-on-year growth, roughly 1.6% up, based on the IBIS data, i.e., this can be a pivotal point in terms of earnings. Earnings growth is expected to accelerate thereafter, with the next 4 quarters from Q4 this year to Q3 next year registering growth of roughly 10 to 13% year-on-year. Such acceleration should support our view of US equities outperforming global equities over the next 6 to 12 months. Now let's take a look at the sectors. Q3 continues to see a wide dispersion in estimated earnings growth, from negative 35% in the energy sector to plus 34% for communication services. Now, of course, with the recent rise in bond yields, the markets would be very interested in looking at comments from banks on the implications for bond portfolio losses as well as for earnings. Looking at the current consensus estimates compared to July, the S&P 500 has seen a positive upward revision in earnings growth for both 2023 from 1.3% to 2.4% and for 2024 from 11.7% to 12.1%. On a sector level, only 2 of the 11 sectors have seen similarly positive revisions since July for both 2023 and 2024 earnings growth, and these sectors are technology and communications. Now, this strong earnings momentum really reinforces our overweight view on these 2 growth sectors. And we also like the healthcare sector as a defensive hedge. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.